I've been at private markets at large, helping clients with their challenges on data and technology and fund services for the last 20 plus years. Talking about private credit really took off after the global financial crisis as banks retrenched from certain lending activities into the high costs of capital associated with those after the regulation. Private credit, what was not even called a private credit at the time, it was a subset of private equity, came in quickly and filled in the gap and started behaving as a bank. But instead of using its deposits, it used the commitments from its LPs to finance those loans. And that took off in a very big way in the US. It is a meaningful part of the financing options that mid-market companies have. And not only mid-market now, firms have become larger. It even competes or at times collaborates with the syndicated loan market. So it's become very important in the US, in North America. It has become very important in Europe to a lesser extent, but very meaningful. And it is in the process of becoming very important across the globe. This is all what is referred to as direct lending, loans to corporations. And what has happened more recently, as that market has started to exhibit some signs of maturity, still not as mature as the syndicated loan market, but private credit firms, as that trend of banks retrenching from different activities, are now growing what is being referred to as asset-based finance. It has gone by different names, specialty finance, securitizations, but let's call it for this discussion asset-based finance. And what does that mean? Everything where instead of lending against the future cash flows of a company, you're lending against an asset and the contractual cash flows associated with that asset. So that's a very broad definition, and it can include anything within the consumer finance world, within residential, buy now, pay later, credit cards, auto loans, student loans, any personal term loans, residential mortgages, home equity, lines of credit. And then the list keeps on going on as you move outside of a consumer world into other types of things. In reality, any type of account receivable, supply chain financing, litigation finance, and then more esoteric stuff like synthetic risk transfers and other things. So very broad-based and becoming very specialized also by verticals, right? Aviation finance, medical equipment finance, a very interesting area, and possibly, according to some commentators, with a larger addressable market than direct lending. So it offers a lot of runway for growth for private equity, private credit firms. We have also hedge fund clients and insurance companies participating directly in this space.